Have you ever heard of a position cluster? Well, a position cluster is a tool pro traders use to take advantage of current market conditions. And that's what separates a pro trader from the individual trader who trades single positions. And today I'm going to teach you all about it. All right, we're inside the lab, and what we're looking at is the momentum factor members area spreadsheet. This is the equity leveraged spreadsheet, and this tells us all the positions that we trade. We're going to talk about position clusters. As you could see here, on the 16th of October, we entered 4 positions. These positions will be exited 2 weeks later. Why did we enter 4 positions at once instead of one position one by one? Well, it's a good question, and I'll explain this to you. When you look at a large hedge fund or a mutual fund, you won't see them buying and selling individual stocks. That's not how they operate. The way large hedge funds work is they buy a basket of stocks, and in each basket, they calculate the exposure of each stock. So each basket will have a position that could be speculative, and one that could be defensive, and another one that could be a bond position, for example. So that the position itself will be very, very targeted based on the current market conditions. When you buy one stock or just one position, you're very vulnerable because anything can happen to that one position. But when you trade a basket, when you combine a basket or a cluster, as I like to call it, you're creating a unique tailored position that's fine-tuned for the current market exposure. So if you look at these positions, if you look at this cluster, you will see that it's made up of a bond position, a tech position, a consumer position, and healthcare stocks. So we combined a cluster, we created an exposure of 4 positions that are unrelated to each other. And what were the results? Well, the stock market during the last 2 weeks lost 5.5%. So if you bought the tech sector, or if you bought the Dow, or if you bought the S&P, or stocks in any of those 3 indexes, over the past 2 weeks, you would be down about 5%, between 4.5% and 5.5%. This cluster, on the other hand, is up slightly. It's between break even and 1% higher today than it was the last 2 weeks. So you would have completely avoided losing or having a drawdown of 5% by using a cluster instead of using an individual stock position. And once again, hedge funds and mutual funds all trade clusters. They trade finely tuned positions to take advantage of the current market cycle. They don't trade individual stocks. It's just not something funds do. And I highly recommend you take this approach. This is what professional traders do. I created a 2.5-hour video class talking about position clusters, taking them apart for you and explaining how they can help you gain an edge in today's market conditions so you can trade like a pro trader. If you're interested, follow the link below this video. Talk soon.